come in. I've got quite a few registered for today, so it'll be good to see a few drop into the room. Now, as always, these sessions are really useful for all if you participate. So please don't be shy. Get involved as well. I'm going to go through some fundamentals today. It's a really important day today and indeed tomorrow. So we're going to go through some fundamentals and then we're going to some technicals. You might have questions, so do get involved. I really do encourage that. It's your chance to basically talk to me. Anything you want me to sort of clarify for you, anything you want me to look at, any particular charts you want me to look at, any trades you may be in, for example. Do reach out and I'll see if I can shed my light onto it as well. Okay, it looks as though we are seeing we got a good bunch of people in the room now. So if you're not inclined to talk about the markets, let me know where you are listening in from. All over the world we're beaming to at the moment. So maybe just jot your name down and let me know where you are in the world. And if you really want to share some more information, let me know the level of experience you're at, because we're going to be doing this now twice a week, every month for the whole of the year, as we did last year at Eightcap. Guest speakers every year, every month. So it's a good idea. It's good for us to gauge exactly the audience that we are addressing. You can let me know the experience you've got. It's going to be good for us so we know where to pitch future events. Okay, so yeah, we've got a really big event coming up today in the financial markets, and it's basically the FOMC. Stands for the Federal Open Market Committee. It's basically the Fed deciding on interest rates. For any of you that trade currencies, the Forex markets, you'll know the main driver of Forex, of the currency, is what is happening to interest rates. That's basically what we do all day long. You see all those economic releases that we see, throughout the calendar month, CPI, retail sales, PMI data, all this data. The reason why we look at this data is because it gives us clues to what interest rates will do. It's all about interest rates. And this week is a really important time because we've got the Fed deciding on their interest rates. And if you've been following the financial markets at all over the last a year or so, you'd have known that the Fed have been on an interest rate hiking cycle. They've been aggressively moving their interest rates higher to basically combat inflation. But this is going to be quite an important meeting, I think, to determine the extent of how much more they can do in the terms of rate hiking. So we'll be paying sort of close attention to that at the moment. I'll give you my views on that in a moment. You'll see this is my momentum meter. I'm on the charts at the moment. This is the chart that I don't know, quite frankly, how anyone can trade the Forex markets without using something like this. It basically tells me where the money is flowing in currencies at the moment. And you can see this green line, which I've colored green because it's the greenback. Basically, it's showing me that the US dollar is coming under a little bit of pressure into the announcement. Just for so you can schedule your day, it's actually going to be at 7 p.m. London time, which is 2 p.m. New York time, which is 6 a.m. Australia time. If you're listening out in Asia Pacific, around 6 a.m. in the morning, of course, depending on where you are in Asia Pacific, but Sydney, Melbourne at 6 a.m. So yeah, a few hours to go. At the moment, the US dollar is coming under a little bit of pressure into it. So the markets, and then of course we've got on Thursday, tomorrow, we've got the Bank of England and the European market, the European Central Bank also discussing their interest rates. We'll talk about that in a moment as well. But I just want to talk briefly a little bit about what we can expect today in the Fed. Okay, so the Fed have been moving interest rates very aggressively over the last year. Okay, and it looks as though we are coming close to what they are calling the terminal rate. The terminal rate basically means the rate at which they will leave interest rates and they're not going to be rising anymore. Now, the market is, without a doubt, pricing in a 25 basis point rise today. It's done. Don't expect to make any money by the Fed announcing a 25 basis point rise. And you said, oh, I heard that first from Andrew. it's time to make money. That's not going to happen, because 25 basis point rise, 25% rise, so 1/4% rise is in the markets. What's important is what the Fed president, that's President Powell, says afterwards. What Powell says afterwards is the most important sort of take that we'll work with today. And there's two things that he can basically be doing. He can either be hawkish. Hawkish basically means that gives an upward pressure on interest rates, therefore an upward pressure on the US dollar. The theory is, if interest rates go up, the currency should follow, and if interest rates come down, the currency should follow. So the forward guidance, if it's hawkish, then you can expect to see the US dollar get stronger. You'll expect to see this green line that you're seeing on the charts at the moment turn up and go stronger. If, on the other hand, the Fed is dovish, then you can expect to see the US dollar come under pressure. The other thing I saw something this morning, very early this morning. I was looking at Bloomberg, and I thought this was a really good sort of statement that they were making, or sort of an observation. This is the statement that the Fed put out every can you please share last, hang on a sec. Okay, yeah, sorry, I beg your pardon. So this is basically the statement that the Fed put out last month. Basically, and I think it's in the first paragraph. This is what the market is going to be looking at, okay, tonight. So if you're going to be inclined to hang around for it, this is what you need to be looking at. This is going to be more important than the 25 basis point rise. And it's this one sentence: ongoing increases in the target range will be appropriate to attain the stance of monetary policy that's sufficiently restrictive. Now, if they change this and they remove this, it's going to be deemed to be dovish. Okay, this basically means, this basically is saying that the current pace that they're rising interest rates, is going to continue until we've seen that it's sufficiently restrictive. If they take this out of the statement, you can expect to see the US dollar trade lower. It's as simple as that, quite frankly. Okay, so keep an eye on that statement. Ongoing increases in the target range will be, target rate, I think it is actually, not target range, target rate will be appropriate. If they remove that, you can sell the US dollar. Okay, so what constitutes a hawkish Fed? Upward pressure, buying the US dollar. Well, before I talk about that, let me just show you what's happening to inflation. We are going to get on to the charts in a moment, but I just want to, it really is important if you're tuning in today, hearing about the Fed, because it's important to know what's driving these markets. This has been inflation over the last year, right? Hit a peak of 9.1% in June 2022. This is why the Fed have been moving the interest rates up, yeah, to curb this inflation. You know, they're mandated to keep inflation at 2%, so we're massively above all target rates. But the inflation rate has been coming down. Last time, basically, we had 6.5, which was in January last month. 6.5. Inflation has been coming down. What's going to be hawkish if he ignores this drop in inflation? If he just doesn't mention inflation, basically that he's not sort of saying that inflation's coming down, and what have you. If he ignores that, that I think is deemed to be hawkish. If he discusses that the market still has a very tight workforce, a very tight labor market, and the employment needs to rise, that is hawkish, okay? Because basically the labor market in the US is at the moment very hawkish. It's very tight. Jobs are plentiful in the US at the moment. And that basically means the workers can demand more salary because there's jobs around all over the place, which is inflationary, yeah? If every worker can demand a bigger wage, that's inflationary. If he discusses this tight labor market and basically reiterates the fact that this labor market is a problem for the Fed, then that's going to be hawkish. That basically means the US dollar could continue higher, because what we're doing, we're thinking about the next rate hike. When's that going to happen? If he confirms, he keeps saying there's some ways to go. Yeah, there's some ways to go in their rate hiking cycle. If he continues with that stance, some ways to go, that's going to be hawkish. That's going to be good for the US dollar. And if he confirms that 2023, we're not going to see a reduction in interest rates, a pivot, you may have heard it called a pivot lower, because rates are going up. If he confirms that we're not going to see a rate reduction this year, that is going to be hawkish. These are the signs that we need to be looking for in his statement to think about buying the US dollar. Okay. So on the other side of that, what's a dovish Fed, which is where you'd sell the US dollar, yeah? Basically indicating that the rates are maybe coming to a peak. Terminal rate is there. Firstly, if he starts talking about how great it is that inflation is now coming down, and he compliments this, and he compliments his previous policy, which as we know is lagging. If he says, yeah, the policy is working and it's, it's going in according to plan, this is deemed to be dovish. If he says rates are close to being sufficiently restrictive, this is the word you need to look for, sufficiently restrictive. Hi, Mohsin Talif, good to see you again. Good to see you indeed. So if he basically confirms that they are restrictive, sufficiently restrictive, again, that's dovish. And the next meeting is March 22. If he says that that's not set in stone, now the futures market is pricing in one more hike next month, another 25 basis points. If he says that that is not set in stone, if he says we are going to be data dependent to decide on the next meeting, then that is going to be considered by the market to be dovish. Okay, so this is what we need to be looking at today, because whatever he comes out with in a few hours time, in 9 hours time, pretty much is going to drive the dollar over pretty much, I think, over the next month, which is why it is so important. Okay, so we'll be looking at that. Personally, what I think is that we are going to, I think the Fed are going to want to remain hawkish. I don't think they want to undo their work, their hard work too prematurely. And I think the market is going to deem that to be dovish. They're going to want to be hawkish, but he can't go all the way. He can't be too hawkish now. And I think the market is going to deem that to be a dovish. So I'm expecting, and you can shoot me down in flames if I'm wrong. I'm expecting, and don't trade on the back of this, by the way. This is not investment advice. This is just my personal view. I don't trade my personal view in the currency markets. I trade what the markets are showing me. But my personal view is that it's going to be dovish today, or the market is going to consider it to be dovish, and that we'll see a fallout in the dollar, and this dollar is going to continue on its downward path. That's my personal view. You saw the similar type of rhetoric coming out of Bank of Canada last week as well. Terminal rates there, they're going to sort of pause now before they reassess. That's my personal view, is they're going to see a weaker dollar. So I hope that makes sense. As I say, please, if you've got any questions on that, do let me know if it makes sense to you. I'd be interested to know if I'm actually resonating, or whether I'm just talking way above what you're grasping. So let me know, and I'll try and re-explain it. Okay, so later on in the week, that's today. Okay, so later on in the week, and then we'll get onto the charts. Later on in the week, we've got tomorrow, we've got the Bank of England and the ECB. Again, rate decisions. Both the central banks have also been raising interest rates, supporting their currency. The markets are pretty much pricing in a 50 basis point rise for the Eurozone, and Lagarde, who's the president of the ECB, it's Governor Powell, isn't it? Not President Powell, Governor Powell, but president of the ECB, Lagarde. She has basically been saying that we are going to be seeing 50 basis point rise this week, and she's also said they're not for changing, they're sticking to the course, basically sticking to the story that there's more 50 basis point rises to come. She has been out there with a very hawkish narrative, and I don't think that is going to change at all. It's one of the reasons why you're looking here at this blue line here on the Mentimeter. It's one of the reasons why you're seeing a reasonably strong euro. And if you look at what happened yesterday, and I'm just going to go out to the daily on this chart here, which you're seeing on the screen. If you look at what happened yesterday, okay, the US dollar was getting reasonably strong. Okay, so the dollar was getting bought up yesterday. Now, normally, because the euro against the dollar is the most actively traded currency pair, what would normally happen, and when I say normally, no markets react normally, but what you'd expect to happen, and it happens, I would say maybe 80% of the time, is that when the dollar gets stronger, the euro gets weaker, because it is the most actively traded currency pair. And you know, a currency transaction has two sides to it. Yeah, that's why it's called a pair. You know, you buy one and you sell the other. So when the dollar gets stronger, you'd normally expect the euro to get weaker. But look what happened yesterday. And you see this green line edging higher. The dollar was getting stronger and the euro was getting stronger. Okay, whereas the euro really should have been trading lower. So this shows me that the buyers are still very much looking to, you know, support the euro. So the euro basically is a strong currency. And of course, when they deliver their 50 basis point rise tomorrow, and they talk about more to come, sticking to the course, as she's been very vocal about saying, you can expect to see a continuation of euro strength. Okay, even if the dollar goes stronger as well, I think you'll still see some euro strength. The other thing, the other central bank to talk about is the Bank of England. Of course, they're meeting tomorrow. It's called the MPC, stands for the Monetary Policy Committee. They are expected to increase their interest rates again by 50 basis points. However, this one is more, I think, up for grabs than the other two. And I say that because, well, if you looked at the last time they met, there's 9 decision makers, there's 9 voters, and they're pretty split. There's a 3-way split last time. It was at 6, 2, and 1. 1 basically wanted a big rise of 75 basis points. 2 didn't want any rises at all, and 6 went for the 50 basis point rise. So this is going to be quite an important one because it's not set in stone. There is a possibility, bearing in mind that 2 voters last month voted for no change, there's a possibility that they'll only raise interest rates by 25 basis points. And that's a strong possibility. And if they do that, I think you can expect to see the British pound come under pressure. Okay, yeah, and that's obviously, you know, about 14 hours from now. So I'm expecting that type of potential positioning to affect clearly the euro against the British pound. So on that fundamental expectations that I'm having, I would say that the euro is most likely to outperform the British pound over the next few trading day this week, certainly. So that's basically what I'm looking at. At the moment, you can see here on the momentum meter, the white line, okay, is the British pound. It's lower, it's trading lower. There's more sellers into the British pound than any other currency apart from the Kiwi. Okay, so the pound is under pressure. The euro, look at the euro, is coming from, if you follow my crosshairs, it's coming from this level of weakness to this level of strength. The euro has been bought, the pound's been sold. I'm a trend follower. I want to buy the strong currencies and I want to sell the weak currencies. That's the only edge that I'm trying to do in the markets. You know, when we're trading Forex, trading any market, we're just looking for an edge. And all you need is the slightest edge to and to keep using that edge for it to play out over time. You have a whole bunch of losing trades, of course you do. You know, it's an edge. It's not a sure fast. You know, it's going to happen. It's an edge. An edge basically means it's more likely to happen than not. You know, you only need a small percentage edge. You know, coin toss 50-50. You only need a 1% edge. You've got a weighted coin that's got a 1% edge. You know, and you get 51.49. You're going to make money. You know, so you know, playing that edge out over time. Of course, you need the numbers, but the edge that I like to use is buying the strong and selling the weak. And basically, you've got the strong euro and you've got these weaker currencies there at the moment. So let's have a quick look then at the euro against the British pound. So this is the euro. Remember, when you buy one currency, you're selling the other currency. looking down here on the bottom bottom right, you'll see that we've made a big sort of support zone. Let me just expand it out for you so you can see it there. A big support zone came in around that. So pretty much since we've been above this level, the euro pound has been in positive territory. Now, never like buying the tops of candles, never like selling the bottoms of candles, always like to buy the pullback. And you've basically seen this pullback. It basically came in from around the 89 level, pretty much, mid-January. We've had this pullback. Where's it pulled back to? It basically is pulled back to the key level of previous structural resistance. And often when you're trading, structural resistance acts as structural support on the way back down. And that's basically what's happening at the moment. So anything in this zone in here now is seeing institutional buying. It's seeing position taking in that sort of stronger interest rate bias that we are talking about at the moment. And at the time of videoing now, as I speak, just drilling up to the 4-hour chart, the pound is indeed underperforming. You saw it on the momentum meter, but we've got basically the next target in here. Well, we're closing in on it. The next target is 88.50. I'm expecting to put a serious challenge in there at the moment. I always say to my traders in our community, you have to always respect these key levels. Us as traders, we can decide to trade, we can decide not to trade. This is all part of building our edge. Okay. If we're buying, if at the moment the market is trading up, okay, so there's 3 things you can do. You can buy it, you can sell it, or you can do nothing. Okay, well, I'm not selling it. The market's trading up. Am I buying it? Well, at the moment I'm coming to this big level of resistance. Okay, so I don't know if this level of resistance at 88.50, 15 pips away from here, I do not know if that's going to be respected. It should be respected. It's a big technical level. Yeah, you can see it looking back. It swung off it there on the 25th of Jan. It bounced off it there a couple of times. It bounced off it there, and indeed it was pretty much a level respected after this big sort of move we had to the upside. Now and it was respected, as I say, just a few days ago. I don't know if it's going to be respected, but I'm not going to trade that with my money. I'm going to trade that with other people's money, not your money, but other people's money. So I'm going to see what the market does with that. I'm not going to trade that until it breaks through. So the way I want to be trading that, I want to see a breakout of this level. I want to see the type of pullback that we have. Does it pull back and smash through that level, which should act as support? If it holds at that level, that's when I'm going to be taking that higher, and I'm going to be looking at 89, and I'm possibly looking at even taking it higher, confirming the bias to the upside. You never want to be trading into big levels of support and resistance. Let the market show you what's there. We don't know what's there. All we can do is get clues from the price action on the chart to tell us what's there. You would expect all these traders that have been taking this down from 87, all these institutional and retail traders. Retail, by the way, are pretty insignificant. It's about 5% of the market, but all these traders in here at the moment, they will be looking at this level. Are they going to react and pull this back down? They could do, but if they do, I won't be losing money. I'll be taking this only when I see what's up here and what the institutions are doing. If they're not taking it lower, I'm confident I can take this trend to continuation higher as well. And of course, you'll see that again on the 1 hour chart. Big level coming in here at the moment. Indeed, if you look on the 1 hour, back to back to this zone. It's not only was it resistance, it was also support. It's a crucial level coming up, but I do like the overall bias of it at the moment. Talking about central banks, let's have a quick look then at the people's favorite. It's called the euro against the dollar, most actively traded currency pair on the planet. We have, I think, of all the FX transactions, they say it's $7.5 trillion going through the markets on a daily basis. It's about right in all different formats. 88% has the dollar on one side, 30% has the euro on the side as well. So fair to say, and then you got the Japanese yen is about 14%, and the pounds I think is about 11%. Yeah, so this is the most actively traded currency pair at the moment. With the bias in mind, euro is looking strong. Look at the euro daily. This shows you how it's strong. This is the daily. There is solid momentum behind here. What I said to you about the euro pound, yep. Well, here's the evidence of it. Yeah, this is a big level. 88.50. Got up to 109.25. All this profit taking, all these long traders in here, all these long traders gets to this level. Why aren't they taking profits? Yeah, big level. Look, this whole decline really was confirmed when we broke out of this level back March last year. Yeah, we had a bit of a consolidation, bounced off it. You know, I've got my sort of tram lines in here at the moment. You know, we had this move down to 108.30, and then back up to 111. You know, or maybe it's a reversal. It basically stalled at the previous support, and then confirmed the downtrend at this level. Broke through, back up to retest, and off it went all the way down to down to 95. We're back up at this level now. Why aren't these buyers all taking profits? I don't know why they're not, but I know they're not. And I know they're not because of this type of price action you see at this level. We pull back in to that level. You put in yesterday a really bullish candle, okay? You know, and I love to use these candles that tells you exactly what's happening on a daily time frame. They're really powerful. It's a bullish pin bar. You can see it right in there, okay? It's a bullish pin bar. It basically shows you that yes, there were some sellers. Absolutely, there were some sellers. Buyers came in, sellers took it in, but they stalled. They didn't even get to the previous swing high. That shows me that the buyers are still in control of this and trading higher. So you're breaking out pretty much like the pound against the euro. Breakout, retest, continuation higher. Now, of course, we've got lots of fundamental news out over the next couple of hours, next day that could impact that. But the writing, I think, is on the wall or in the charts. Petra's got a question for me. Let's have a look. Petra says, what does Petra say? Let's have a look here. The questions. I'm not seeing the questions. Maybe my team can. Maybe the team on TradingView. There you go. On TradingView. You want to see the currencies like me? Is that from Petra? There you go. Beg your pardon, Petra. You want to see the charts like me on TradingView? Okay, yes, okay, good. Yep, no problem. Okay, so I just on that, Petra, I started trading currencies basically in about 2005. I lost a whole bunch of money in 2005, 2006. I used to be a floor trader. You can see me there with my trading jackets. I thought I was going to give up trading really until I just changed everything I was doing, and I pulled everything back down to basics, took it back down to what I used to do in the pits. If Goldman Sachs and JP Morgans and all the big banks in the trading pits were buying, they're all shouting buy, buy, buy. I'm a little trader, small time trader. I bought, yeah. That's how I made my money. I just went with what the big guys are doing, and I basically coded this up in about 2006, 2007. Well, I didn't code it. I had some guys in Eastern Europe code it for me. Very nice guys they were at the time. I called it the momentum meter. Now, I also have had it coded up for me on TradingView, which you can get. So what you need to do is pull up a price chart. Here I've got the 8-cap dollar Swiss, but you don't need the price chart on this one. You just move it up and go to indicators. Okay, and in here you type in a momentum meter for top 8 currencies. Okay, now this guy here that coded this used to work for me in my old company that you may have seen me in before. A lot of you have. I built up 250,000 followers on YouTube, but I left them last year. But Mohsin was the guy that I employed in our customer support actually, and he kindly coded this for me at the old place. And it's there at the moment, but I don't own this. He could take, I don't work for that company anymore. I don't have any involvement. He could take it down at any time, but at the moment it's there. I don't see why he would take it down. But if it does get taken down, you can always come and touch base with me, and I'll give you my own personal one as well, because I use mine on on a trading. This is my Trading View platform. I'm still short the euro CAD there. That's good. This is my Trading View platform, and I have one on there as well, which is basically there we go. Basically this one here. Okay, different versions of this, but this does exactly the same. Okay, but you can always get that from me. So that's what you do. If you want to get that picture, just go to the Trading View, go to indicators and type in momentum meter for top 8 currencies, and it is yours. If you're using Trading View, I of course suggest that when you're taking your feeds, I suggest you take your feeds from Eightcap. Of course, when you type in a currency pair, you can type in euro dollar, for example, euro USD, and now Eightcap are putting in. You can take the feeds directly from Eightcap as well, so so everything's in line. So I suggest you do that as well now, if you're using Trading View. So perfect for that. Right, okay, so that's basically the euro against the US dollar. Any questions, of course, drop them in again. Yeah, any further questions, I'll get to them as well. I'm almost coming to the end now. I'm only allowed half an hour, so there we are. So looking at the euro dollar, pound, okay, pound, we are coming into a significant level. I think this is more likely than the euro, and I don't think the euro is going to pull back. I think, if anything, if the dollar is going to get stronger, right? If the dollar comes out with a hawkish meeting today, basically good for the dollar. Well, normally you'd be looking at maybe buying the selling the euro against it. I would think you're more you're going to be better suited potentially to sell the British pound against it. Okay, I mean, we've come in again, big level of resistance here at 124.25. Moving averages on the. I'm not a moving average trader, but I do like to use these. By the way, if you want to know what these are, I just use the 10, 20, 40. I don't trade off them dynamically, but I use them for sort of like a trend visualization. When you see them all fanning out in a particular direction, that constitutes for me a strong trend. You see here on the 4-hour chart, the moving averages are beginning to fan out to they're beginning to turn to the downside. We put in these pullbacks. Each pullback is making a lower high, and if you're looking at one of the sort of pattern strategies that I would teach, you're looking for the 1, 2, 3, and the 4. Then a break of this zone here, which we've just broken, for me indicates trend continuation to the downside. So we've broken through this, what I would consider to be structural support on the lower time frame charts. Comes in there, so it's basically the 1, 2, 3, 4. So 1, 4, and that will indicate reversal. And you see we keep coming back in to test it to roll back. So I'm quite liking that at the moment. If you are trading that type of bias, the way I would, the way I teach this would be to have your profit targets based down on the next level of support, but your stop loss level will be at the previous swing high. So your stops are going to be above there for profit targets down there. It makes for a decent risk reward trade. Okay, so I better wrap that up. I mean, I know, gosh, it does go very quick here, doesn't it? Hopefully you found that interesting. We've got a whole good bunch watching in. If you have any questions, now's the time to ask. If not, then I'm gonna wrap it up there. As I say, the FOMC tonight is at 7 p.m., which is London time. That is 8 p.m. Europe time. That is 2 p.m. New York time, and that's 6 a.m. Sydney time. And that is 3 in the morning if you're in the Philippines. So make sure you are aware of that. I think I've given you a bit of an insight to what I expect there. It's all about the forward guidance, what they're going to be talking about, and I told you the currency pairs that I think you should be looking at. And of course, then you've got the ECB out and the Bank of England out tomorrow. Very big market events. And on Friday, of course, we've got non-farm payroll, which is the job numbers. Powell doesn't know the non-farm payroll yet. He doesn't know what the job numbers are in the US yet. He doesn't normally get them until I think the night before. It's very close anyway. But we got non-farm payroll out on Friday, which is always a good event. Which of course I am streaming live. If anyone wants to come and join that at the City Traders, just go to the City Traders YouTube channel, which is obviously where we'll stream it live. You can come and join that for free. If you want to have more of this analysis. Don't forget, of course, to subscribe to Eightcap YouTube channel as well. That way you can watch these events that we're doing on a Monday and Wednesday. You can watch them on catch up as well if you want to recap on them. And as I said, we're doing these events now twice a week, every week for the entire year, for the whole of 2022. We did the same last year as well. I had a whole bunch of really good guest speakers. This month, I've been honored to be doing the first month in for February. Next month, it will be another speaker as well. If you subscribe to the Eightcap YouTube channel, then of course, you'll be able to follow those as they come. And of course, if you hit that subscribe button, sorry, that notification button, you'll be notified the moment it gets released up there as well. So I encourage you to do that. All right, folks, I'll leave it there now. Have a good rest of the day and trade safe. Thanks for tuning in. Have a good one.